Hey guys, Tommy Bryson here, and the Fed actually meant, and you're probably wondering, Tommy, why do I care if the Fed meant? Well, the Fed is in charge of the economy, which means it affects you in some way, and it also affects your money. Now, there's an interview out there when they actually interview one of the chairs, and that guy's name is actually Jerome Powell. Very important person, okay? Now, the main thing is this, guys. He spoke for around 7 minutes, and then they asked him so many questions that I dragged it out to an entire hour. So the goal for this video is to tell you exactly everything the Fed is going to do to help the economy and actually stimulate it, but actually save you a ton of time and compress it or compound it or actually just limit it to like 10 minutes or less. That is the goal here, guys. So by the end of this video, you should walk away knowing exactly what the Fed is, what they do, and what they're going to do for the economy, and most importantly, how you can use this to actually make some money yourself. Now, as news keeps coming out, I'll keep you guys updated. So make sure to subscribe to the channel and hit the bell so you get notified every time I post a new video. And before I forget to ask, make sure to also smash the like button. It helps a lot, so thank you guys so much. Now, the very first thing I want to break down is this, guys, okay? Whenever you think about the federal government or the Federal Reserve, the Treasury, I want you to think about basically like the big bank or the central bank for the United States of America. That's all it really is. It has the authority to actually set up monetary policy and also print money. And that's where you're seeing a lot of people saying like, hey, they're going to print unlimited money, but then inflation is going to take into place, okay? These people are in charge basically containing the U.S. economy and making sure everything runs okay, no inflation, and people and enough money is circulating in the economy so the economy stays good. And they also look at unemployment. And again, unemployment right now might actually hit like double-digit numbers because again, it is the worst, well, one of the worst that's ever been in history because of everything that's been going on right now. But more importantly, what I really want to break down exactly, well, Tommy, what is the Fed actually going to do for the economy and how can I use this for my own benefit in a sense, okay? Although it's all about, making sure everyone is safe, I just want to make sure you guys also have the unique ability to actually know exactly what they're doing, how the market is going to react, and how you can use that to actually benefit in some way. So do you save more money now? Do you spend more money? Do you buy investments? What exactly do you do? That's what you're going to get by the end of this video, so stick around till the end, okay? Now, the very first thing the Federal Reserve can actually do is basically cut rates. And now they're basically cut it to nearly 0%. Now, you probably heard it from every YouTuber out there saying like, hey, the Fed cut rates, unlimited money, go borrow money. But in reality, when you think about the Fed cutting rates, you want to think about basically three people. You have the average person, the investor, and on top of that, also the saver. And if you're a normal person, you probably know a person that saves a lot of money, hoards it. You also know someone that just spends money, and also someone that wants to invest the money to make more money. Let's start with the saver, okay? The saver is going to suffer so much here. And here's why. Because all you're doing is basically just saving money, in your savings accounts and relying on that interest to actually, give you income. That's the worst idea, and here's why. Because whenever the Fed cut rates, it means that bank can lend money between each other for a much lower price, which basically means they won't really pay you as much money on your money, which basically means you're just losing a ton of money to inflation every single year. So saving basically becomes irrelevant, which kind of sucks, right? But that's how it works. Now, Tommy, why exactly would the Fed actually do this? The answer is it promotes spending, it also promotes employing people, and it also promotes businesses. Now, Tommy, why and how? The answer is very simple, guys, okay? If banks can borrow money for cheaper, and they can actually lend it for cheaper also because the profit margin is still kind of like the same. Well, in reality, an investor or an average person can walk into a bank and borrow enough money, for example, to buy a house, to buy a car, which means that more money is being spent in the economy, but also investors, businesses can actually go out there, borrow more money, spend it, and then the profits, where do they spend that money? Again, in the economy. So it always goes back to the economy. The more money flowing in the economy, the healthier and the more vibrant an economy actually is, unless you get hyperinflation. Now that is a nightmare, and basically means when there is a lot of money in the economy and basically prices go up like crazy, that's the last thing you want to see. Because although in the US our highest denomination of money is $100, in some countries they have a million, 10 millions, and I've even seen some for 1 billion, okay? So in reality, hyperinflation is the last thing you want to do. So that's why the Federal Reserve also makes sure, hey, let's be very careful how we cut rates and also regulations, because we don't want, you walking in and be like, hey, can I buy a dozen eggs? Yeah, it'll be $1. Tomorrow you come in and like, hey, yeah, it's 1,000. Okay, you're like, what just happened here? Okay, that's not what you want. Now, number two, I also want to explain, tell me, what does the Fed think about everything that's going on right now? How long do they think this is actually going to last? Now, I made this mistake in the past, guys, when I think that, these people in the Fed, Congress, the government, like, they know a lot more than we know. In reality, they don't really know what is going on and what's going to happen, because again, everything is so brand new. So whenever you go, and if you want to watch that full interview, like, link down below, but it's an hour long, you don't need to. But the idea is, guys, okay, all Jerome Powell said, a very smart man said, like, hey, it's brand new. We don't know how long it's going to go for, but we're going to do everything in our power to make sure the economy stays healthy. That is all he said over and over and over again, and that is code for, I don't know what the heck is going to happen, but let's just do our best to make sure that our house doesn't burn down. And that's the honest answer. And that's why also the Federal Reserve is also doing something else, and that is called buying back treasury bonds. Now, tell me, why would the Federal Reserve want to buy back treasury bonds? Isn't that really like government debt? The answer is yes, but they do this to promote basically low interest rates also. So say, for example, I also own some treasury bonds, believe it or not. However, let's say, for example, they go ahead and start buying more, and buying more. That means that there are less treasury bonds out there in the market, which basically means the ones that are actually out there, the ones left, well, they actually sell for a higher price, but the interest rate you actually get paid for having them is also much lower. Now tell me, what does that actually cost? Okay, like, what happens there? The answer is, well, people, what they want to do is basically like, well, let me not spend my money in treasury bonds because the interest is so low. Let me go out there and invest it into something else. If you notice, guys, the entire goal again is to put money back into the economy and less money into people that just want to hoard money, although sometimes hoarding money might be a good idea. Maybe, sometimes. Rarely I ever do that. I'm always investing, but sometimes you always want to keep some money on the side to make sure you're good, your family's good, and everybody is taken care of. And that's why I always keep 6 months worth of emergencies in my bank account just in case something goes wrong. And guess what? Something did go wrong, okay? So thankfully I did that. If you haven't done that yet, make sure to do that and save 6 months worth of emergencies, and this way you're covered if anything does happen again. And now, guys, number 3, the Federal Reserve also has the power to tell banks how much money they should have in reserves. Now, the idea is that whenever you go to a bank, for example, and you say like, hey, my name is Tommy Bryson, I want to deposit $100, well, the bank goes ahead and they'll lend that money out. But in reality, they can't lend out the full $100 because they need to keep some money in their bank accounts, in the balance sheets, to make sure everything is okay in case the bank has like a huge, massive problem. Now, the regulatory rate is around 10% usually, which means that if you go ahead and you deposit $100, it means they have to keep $10% in their deposits and can only lend up to $90 or 90% of it, okay? That sounds still kind of risky, but that's how it is because you also want to promote healthy lending. More money's in the economy, the healthier the economy is. However, guess what the Federal Reserve actually did now? They said, hey, you don't need to keep anything right now. So they basically put it at 0% in reserves. And on top of that, whenever you have a savings account, so they say like, hey, you can only take out like 6 times like per month or whatever, or you get like a penalty. Now anyone out there can take out as much money as they want for their savings. Tell me why? The answer is, again, because they want less people saving and more people spending to promote, again, a healthier, more vibrant economy. But again, I don't think anything right now is probably going to help because, again, no one is outside, no businesses are open. So the idea is, although it is cheap to actually get money, no one is actually going to be borrowing that much because, again, everyone is in their home. This only works like once the economy goes back to normal, businesses open back up, and people have their jobs again. It's actually a good thing to put the economy back to where it was, or very slowly or very rapidly. But the answer is right now, it's kind of like the very few are going to take advantage and grab a lot of money and go out there and start buying. Because guess what, guys? A little tip is this, okay? Jerome Powell also said, you know what? Some people might actually lose their homes. Okay, it's very possible. So the answer is, if that starts happening, guess what investors want to do? They want to start buying for cheap. And if they start buying for cheap, guess what happens then? Well, in reality, they have more opportunities out there. However, he also did say that whenever there is more money circulating in the economy and also interest rates are very low, usually the house value actually goes up. So it's kind of like it'll go up also, the housing market, but in reality, people that want to sell for an emergency will also list their properties for a much lower discount also. So that's very possible. Now, the last thing I want to tell you guys is this, okay? If you made it all the way to the end of the video, by this point, you know a lot more than the average person about the Federal Reserve. So give yourself a pat on the back, because again, now you know exactly what the Federal Reserve can do and what they're doing to actually help and stimulate the economy for you. Now, another thing they can do, guys, just so you guys leave here with all the information as much as possible, is that they also do quantitative easing. Now, this is whenever they actually go ahead and buy long-term securities to actually promote more money being out there in the economy for a longer period of time. And on top of that, they also have security lending facilities, which is code for back in 2008 when they had a lot of mortgage-backed securities, very bad ones. The Federal Reserve actually allowed those banks to trade them in for treasury bonds, okay? And then that was the end of the story. And lastly, guys, you also have auction facilities to actually allow banks to bid how much interest they're willing to pay to actually borrow money from the Federal Reserve, okay? Now, guys, okay. So, Tommy, what does all this stuff mean? If you guys didn't know this, this video is basically all about exactly what the Federal Reserve can do. Now, how exactly does this help you in any way actually make money? The answer is, guys, whenever you know exactly what the Federal Reserve is doing, usually you know exactly where the economy is going to head next. However, one thing I didn't mention is that the Federal Reserve also has the power of manipulation. Now, here's how. If they say, for example, hey, we're expecting this to happen, well, you might say, for example, well, they said this, so now I trust this. The answer is no. You always want to absorb, but also see exactly what they're doing, okay? You are your actions, not what you say. So they might say something to promote something else for investors, but you always have to see exactly what they're doing. So not just listen to like, oh, we're going to do this or we expect this. Don't listen to that. Well, watch exactly what they're doing, and then you'll know exactly where the economy is heading next. So what I've noticed is this, guys, okay? The Federal Reserve has no idea what's going to happen next. Let's be honest. No one does until we find either a vaccine or a drug to help us out with all this tragedy. In reality, they are still not sure exactly what's going to happen. So all they're really trying to do is trying to keep their house from burning down, okay? So that is basically it. So everything you're seeing right now is just them trying to sustain sanity inside of the US. So it's kind of like, if you guys believe that the entire virus is going to go away in like a year or 2 years, well, invest a lot of money. If you believe that it's going to stay here forever, then you might not want to invest a lot of money. Now tell me, what are you doing? Guess what? I'm investing a lot of money, because again, I also believe that by me investing money now, I'll get more money later, because again, a lot of fear is like triggering people to sell, and that's causing the price to go down, which means I'm gonna get a discount, which means when I do sell, if I ever do sell, I'm gonna make a lot of money, okay? Because again, the facts to everything that's going on right now, it's out there. So if you read about it, you'll find out exactly what's going on. But guys, that is basically it. Comment down below and let me know exactly what do you think about what the Federal Reserve is doing, and what are you going to do specifically to actually either borrow more money, save more money, or spend more money. Comment down below and let me know. And as always, if you guys enjoyed this video right here, well, like, subscribe, and hit the notification bell so you get notified every time I post a new video. And on top of that, I also have a new channel, and it's called the Tommy Bryson Show. So check that out, link down below. And also follow me on Instagram, Tommy Bryson. And before I go, if you want to watch another video and how exactly I'm investing during these times, watch this video right here. Also get my face right here. It's also right now. I'll see you guys tomorrow. Thanks for watching. And as always, peace. Stay safe.